Avenue Supermarts hits a 15% circuit and is now trading 14% higher after a strong business update reflecting a 17% revenue growth in the third quarter. V2 Retail also sees a 58% jump in the third quarter revenue. The stock is in a 5% upper circuit.
ONGC climbs more than 2% on the back of rising crude prices. Brent crude prices holding above $76 per barrel. Brokerage firm Jefferies maintains its buy call on the stock, though they trimmed their target price to 385 rupees from around 410 rupees earlier.
Hero MotoCorp is down over 2.5% after the company reported a weak sales figure for the month of December. Total sales were down 18% compared to an estimate of a 5% decline.
Wockhardt surges nearly 6.5% after the CDSCO approves a new generation oral antibiotic for treatment of community-acquired bacterial pneumonia.
And Bank of Maharashtra rallies up to 6% and cools off from the highs of the day following its third quarter business update. The deposit growth is weak on a sequential basis, but loan growth remains robust.
Hello and welcome to Chartbusters. I'm Nigel. With me is Hormuz. And as we speak, well, the market's a little under the weather. We're down close to around 150 points odd. However, in the first 30 minutes, what we saw was that the mid-cap index was up and about. Well, in today's trading session, though, we have seen gradually in the last few minutes, mid-cap index has given away that advantage. And as we speak, it's virtually at the low point of the day. Hormuz, yesterday we had a big bazooka rally. Today, in fact, some kind of cooling off. But it's a Friday. I think the bulls will want to fight back at some point of time.
They would definitely want to, right? Considering the move that they saw in yesterday's session, and we are heading towards very, very key levels yet again. 24,000 on the downside is something that the bulls will have to protect as a psychological level. Of course, we tried crossing 24,200 in yesterday's trading session, couldn't do so, and now we are trying to defend 24,000 on the downside. Are the bulls, but the day today belongs to these retail supermarket chain companies, be it the likes of Vishal. Mart is one of that I would like to pull up, though. We spoke of Avenue Supermarts and of V2 Retail, but Vishal Mart too, in line of how these stocks have moved, is also surging with gains of around 7.5% as we speak. This is the highest post-listing level that the stock has seen. Remember, it listed last month at a significant premium to its issue price and is building on to those gains. But what's in store for the markets? And on the charts for the Nifty, we have Somil Mehta of Mirai Asset Share Khan, who's joining in for a technical check. Somil, good morning. Thank you for joining in. You know, we crossed important levels yesterday. We tried to grow past 24,200, but we couldn't do so. What are the charts indicating now? Is 24,000 a very, very important level to watch out for the Nifty? And couple that up with your stock recommendations as well.
Sure. I think there are two things which I would like to highlight. One, that we have taken support twice from 200 daily exponential moving average in the last few months, and now we have headed up again. Of course, the support, there will be a little bit of cool off in the very short term, and the supports will be around 24,000, which was the resistance previously. So 24,000, 23,950 would be the support in the very, very short term. On the upside, I think the targets would be, for a medium term, I think the targets would be around 25,000. But I think the markets have become buy on dips now, and every dip would be a buying opportunity. There are a lot of stocks which have corrected very sharply in last couple of months, and now they are starting to retrace the entire gain, entire fall. One of them is Reliance, and I think Reliance would be my preferred stock to buy at these levels. Reliance would be a buy with a stop loss of 1,205, and the target would be around 1,330. That would be my first stock to buy. It has given a positive weekly close last week, and I think now it is starting to give us a bounce, a big bounce from here. The next stock for me today would be Indian Bank. The smaller banks today are in flavor, and I think from here, smaller banks would do extremely good. The buy call would be on Indian Bank. Stop loss would be around 515, and the target would be around 565.
Okay, all right. Hi, Samuel. It's been a long time since we chatted, I think a few years. Good to see you back and looking forward to interacting with you more often. Just a quick, question with regard to buy on dips. When does this buy on dips get negated? We're holding at around 24,000. We're down 170 points. When would this buy on dip strategy get negated? 23,500, 23,600, if you could give us a level.
23,500. That's the level which I'm looking at, because we have taken support at 200 daily moving average, exponential daily moving average, and we have come up from there. The previous swing low is around 23,500, and also there is a trend line, upward sloping trend line, which is going on since start of 2023. And that trend line is also a very, very crucial support. If we go below, if we close decisively below 23,500, then the entire medium term trend also becomes negative, and we can slip down very sharply. But I'm not looking at that. I'm looking at a very good bounce from here till 25,000.
Got it. Okay, Samuel, thanks a lot for that. We hold on. We'll hold you to that view. 23,500 on the downside for targets of around 25,000. Well, let's focus to our special segment where we get you a few ideas for profit from Money Control Pro. Khushbu of moneycontrol.com joins us to talk about a stock she's tracking closely. Khushbu?
In today's idea for profit, we have ITC Limited. ITC is an Indian conglomerate with diverse interests spanning across cigarettes, branded packaged food, personal care, hotel, and agri-businesses. The recent quarterly earnings was in line with expectations, but the inflationary headwinds weighed on consumption and FMCG business. The core cigarette business, which accounts for more than 78% of the profitability, has shown resilient performance backed by differentiated and premium products. Also, improved rural cash flows and government infra push should drive rural demand going forward. If we look at the non-core businesses, agri has seen strong traction led by higher exports and value-added products. Also, after the demerger of the soon-to-be listed hotel business, it will unlock value for the existing shareholders of ITC. Overall, ITC is a defensive play with a decent dividend yield which can help the stock to outperform in the near term given the macro headwinds and elevated market volatility.
Ideas for profit there from Money Control Pro. And interestingly, today is also the last day to buy the shares of ITC before the record date for the demerger takes place on Monday. So keep ITC on your radar. But time for a short break. On the other side, we'll be joined by Sachin Agrawal, who is the chairman and managing director of PTC Industries, to discuss their recent capacity expansion plans and much more on the business outlook. Stay tuned.
Welcome back. Well, it appears it's the day for the retail-focused stocks. You have Avenue Supermarts that's still holding with a gain of close to around 15%. Vishal Mega Mart, the stock actually had started off more or less flattish. Now, in fact, it's seen a good build-up in terms of those gains. It's moved to the high point of the day. So, big move is what we're seeing out there. V2 Retail, that's locked 5% higher as we speak. Sapphire, that's another stock, in fact, that's moved quite well, currently at the high point of the day. So, Hormuz, though the headline index is seeing some bit of selling pressure, there are pockets of strength that we've seen. Quest Corp as well is up close to around 5%. So, good up move on a few of these names, and these moves are coming on high volumes.
Indeed, and some of these volumes, as you mentioned, Sapphire Foods, Quest Corp, Z Entertainment is also springing up on the list of gainers now, 4.5% higher there as well. And Oil India, the best PSU performer of 2024, another 5% gain in today's trading session.
Okay, all right. Well, let's focus on PTC Industries. The company recently announced the commissioning of a 1,500 ton per annum VAR furnace for producing high-quality titanium alloy parts. We have with us Mr. Sachin Agrawal, who is the chairman and the managing director of the company. Hi, Mr. Agrawal. Good morning. Thanks a lot for joining in. Wishing you and your team a very, very happy new year for the remainder of this year. Well, you've given good news on the first day itself. The commissioning of this particular furnace is something that the market was waiting for. It's a 1,500 ton per annum capacity. Could you help us out with a few numbers? I understand that normally ingots come for roughly around 40,000 rupees odd. You will be selling it, I think, could be selling it in the cast form, so it could be around 50,000 rupees per kg. If that calculation is correct, what is the total revenue that you can generate from this 1,500 ton facility? Please go ahead, sir.
Thank you very much. Happy New Year to you and Happy New Year to all your audience. So I think this is first of all, it's a major achievement in the sense that this is the first time titanium ingot manufacturing or titanium alloy manufacturing is starting within the country. This is part of our strategy to achieve parity in terms of all metal-related aspects in the country and put the country at par and make it fully self-reliant in the entire supply chain related to defense and aerospace. Specifically related to the numbers, the titanium ingots in the form of billets and other materials sell at a varied rate. We are not just going to make ingots. This will be a very interesting year for us because this is part of our strategic material technology complex in Lucknow, which is being built on a 50-acre campus in the Lucknow Defense Corridor. And there we are. This is the first equipment that has gotten commissioned. There are many more equipment to be commissioned. This is part of our melt capacity or melt facility. Besides, there's a whole new casting facility coming and a whole new open die forging and rolling mill facility coming, which will convert these into billets and rounds, bars, sheets, plates, and every type of wrought and mill product. The range of selling this material in titanium, it goes right from around 2,500 rupees per kg to almost 15 to 20,000 rupees per kg. So, and this is just 1,500 kg is first equipment. There's another EBCHR, which will also be commissioned during this year, later part of this year, which is a 5,000 ton capacity for titanium. So it's a huge capacity. It's a significant percentage of the world capacity.
Mr. Agarwal, we're trying to get a number. 1,500 tons per annum can generate how much of revenues? 400 crores, 500 crores, 300 crores. At optimal levels, what kind of revenue can it generate?
It's as I said, this is not a single facility. This is 1,500 tons is just one part of the process. There's a whole additional capacity coming. So we have to marry both of them together. If you look at the entire capacity of the plant towards the end of the year, over the next year, then we're talking about a 6,000 to 6,500 ton capacity, which at full capacity could generate anywhere between 2,000 to 3,000 crores, up to even 4,000 crores, depending on how we convert or in which form do we sell these materials in.
Just to understand better, I believe that it goes up to this facility, this capacity of 6,000 tons plus once you commission the EBCHR and the PAM furnaces. By when does that happen? Which quarter of this year? And just to reiterate that number, at optimal levels, you can do anything in excess of 2,000 crores from this facility. Is that correct?
That's right, yeah. And then these other equipment will also get commissioned within this calendar year or the next financial year.
Mr. Agarwal, good morning. Thank you for joining in. Firstly, we wish you a very happy new year as well. Firstly, if I could get just this out of the way, that will this facility be earnings accretive from FY26? If I get that correctly, if you could clarify on that. And the second one being the fact that you also completed the acquisition of Track Precision Solutions last month after the approvals that you got from the UK regulator. What was the rationale behind that, and how does that add to your business synergies?
Yeah, so the rationale behind Track Precision is that, as I mentioned, our company is into manufacturing of in all areas which are strategic and critical in nature, and where technology has been a constraint for the country for many years, right, for anything related to metal. So anything related to strategic and critical materials like titanium, super alloys. alloy manufacturing, mill products, wrought products, as well as castings and forging. One of the key technologies missing in the country, or the technology or know-how missing, was related to machining of casted airfoils. If your other audience would know, about a year back, we announced, or less than a year back, we announced complete technology development of single crystal castings within the country. Now we have acquired Track in the UK, which can machine and drill and make these ready to fit and coat ready to fit cast blades that go on aero engines as well as on industrial gas turbines, which is a very specific technology. Very few companies in the world has this capability. Even within India, people can machine blades and airfoils from solids and forgings, but not from castings. And that's a specific technology that we have acquired.
Mr. Agarwal, how does this acquisition and the new capacity you are adding add up to your margins? Your first half margins were around 26.5%. How does that add to your margins? How much more improvement do you see with these two steps that you have taken?
The margin development will keep on progressing over the next few years. We expect the margins to be somewhere in the region of around 30% going forward.
All right, very quickly, before we let you go, I'm looking at an ICICI Securities note who believes that this is a big positive for you, this commissioning of this facility. And they are talking about revenues of around 750 crores for FY26, which goes up to around 1700 crores in FY27. Would that be a broad aspiration?
Yes, I would say so. Yeah.
Okay. And this 30% margins, we should see it sometime in FY26 itself?
I would say years after that, maybe a year after that.
Just one quick point with regard to your working capital days. That's one of the risks that they have mentioned. High level of working capital is one of the potential risks. Could you tell us what it is currently, your working capital requirement, and what's the outlook on that front?
Working capital is in the region of around 100 days, 100 to 120 days. Currently, I don't, as you asked about the margin, if the margins are sitting at around 30%, the advantage with the mix of products that we have, right from castings to materials, is that the entire value chain of the right from material all the way to finished products is covered within the company. So the margin is getting built up on each process. So we are actually having 4 processes all within the company. So as we go forward, in comparison to the entire revenue or top line, the working capital requirement will actually start diminishing rather than increasing.
Okay. All right. Well, thanks a lot for joining in, Mr. Agarwal. You seem to be quite optimistic on prospects. The stock for the last 6 months hasn't done anything much. So it seems the street was waiting to hear something on this particular front. We'll track you to a couple of these numbers. Appreciate you joining in. Well, for the time being, we'll slip into that mandatory break, come back, and we'll continue to focus on markets. Stay with us.
Welcome back. As we just spoke to you about the fact that it's the day that belongs to the retailers, even as the Nifty is now down 180 points from the highs of the day, and the bulls are fighting tooth and nail to prevent breaking below that mark of 24,000 as we speak. It's almost there, trying to defend that level of 24,000. But the day today, though, belongs to these retail companies. Avenue Supermarts is one of them, a 15% circuit now after its third quarter update. Vinny is here to tell us more on that and what brokerages are making of it. Vinny.
Yes, good morning. So, in terms of numbers coming in for the business update for Q3 FY25, interesting numbers, 17% standalone revenue growth versus last quarter was around 14%. So, the pickup that we're seeing sequentially in terms of the growth for the company. Now, total number of stores added this time also has seen a better performance because they added 10 stores during the quarter versus last quarter was 6 stores is what they added. Overall, the total stores as of now are at 387. Now, what brokerages are saying this morning, CLSA is maintaining the outperform rating, target price of 5,360 rupees per share. They said the revenue is surely seeing a good improvement, which is about 2% of their estimate. So, that concern coming in that maybe this includes only festive season, but analysts had already anticipated this. And despite that, CLSA is saying that this is better than what they were anticipating. Other than that, in terms of CLSA, the highlight is also coming in terms of pickup in terms of revenue growth as well as stock growth, which I mentioned. Other than that, we have Citi, which is actually a bit subdued in terms of their rating that they've given. Sales rating is what they are maintaining. Target price of 3,500 rupees per share. And the concern they highlight is that quick commerce is picking up pace. So, how does that impact the company is still a key factor to watch out for. Plus, in terms of the product mix, general merchandise mix is something that they're watching out for. Has that seen a pickup? If the adverse product mix continues, then that could be a concern for the company going forward. So, they're a bit cautious in terms of the margins of the company and the outlook on that front. Similarly, Goldman Sachs also is maintaining a sell rating, target price of 3,425, highlighting the quick commerce concerns and competition on that front. And Morgan Stanley too is maintaining their underweight rating, target price of 3,002 rupees per share.
Well, brokerages remain divided, but the street is definitely cheering that business update. Vinny, thanks a lot for that. And as we call time on this edition of Chartbusters, here's some good news for our viewers. India's business news leader is now just a click away, introducing CNBC-TV18's all-new app to get instant access to breaking news, in-depth articles and financial world update at your fingertips. Download the app now from the Apple Store or the Google Play Store. From Nigel, me and the team that put this show together, it's goodbye. Trading Hour comes up next.